Hello traders, good day to everyone. So this is now the last day of trading because it's Friday. Every trade ends in Friday. So let's see if we are going to make a profit during the whole week. Let's see if our trades turn out to be positive or negative. So we hope that everything goes to positive at the end of the trading day. So our trade today is um, we will focus only on um, before the US session starts, because as we know, when the New York session starts and move on during the Friday time, the volumes will go down, and the volume is one of the most important thing that we need in order for us to focus on this strategy. Okay, so we started our trading last Monday, July 10, and then we have a very small capital, which is around $13. All right, so let's see the our trades, how it turns out today. Okay, so as you can see, we have negative orders. Okay, our time as of the moment is 6:10 p.m. So this is GMT plus 8, which is in the Philippine time. We have orders in place going up, but our positions are going south. Okay, so we take our order because our strategy tell us to take it. It's because of this, our main indicator that tell us when to position, to take position, like is it time to buy or is it time to sell. As I have discussed in my previous videos, the RSI are used only for levels 70, 50, 30. These are the levels. The RSI are not used for anything like that. Instead, we use envelope and we use force index. As I have also mentioned the different settings of that in my previous videos. Maybe you can look into that. Okay, so our strategy tell us that if the price is below the 30 levels, it's time to buy. If it is around 70 levels or above, it's time to sell. But it's not the only indication that we will use in order for us to enter the market. We also have the indicators exponential moving average, which is this one. So we have 4 exponential moving average that we are going to use and tell us that it's time to buy or time to sell. As you can see here, our strategy told us that if the price moves or if the price is away from the moving average, then we will take a buy. So in this situation, we started buying here because the EMA, or the price is away from the EMA. Okay, it turns out that the price goes down, but as soon as the price goes down, we will add more orders because we are doing the cost averaging. Take note that this is only a 1 minute time frame. This is a 1 minute time frame, and we do all of our trades inside the 1 minute. Another things to notice is that we are not following the trend. We are doing the opposite. We are doing the counter trend. So that's how we do the trade. Right, so as you can see here, the price is still far from our profit. We are still at negative 0.17. Okay, and then as you can see here, the volume started to spike. Also, one thing to notice is this indicator. That's a moving average indicator. The moving average with inside the volume. So we place a moving average inside the volume indicator. That's how we look at it. And take note, this volume indicator does not tell us which sides are we going to enter. The volume is just a guide for us if there are more buyers or there are more sellers coming in or traders coming in, and that would indicate that the market is moving fast or moving slow. So as of the moment, we are still waiting for the price to go back. At least we are aiming our target at least here in this area. The reason for that is if we are moving in this area, we are in profit already, but the price is going down. Yes, that's the trend. We are doing the opposite. Instead of going down, we want to move up. We want the price to move up. And our strategy is a combination of cost averaging and smart entry. We do the entry using the exponential moving average. We have four, the EMA 9, 20, 50, and 200. So those are the levels that we want to our price to go back. So those are our target levels when we want the to take profit. As of the moment, if we are going to close our trade in this situation, we are in loss because there are several orders that are still in negative. All of you are in positive. And then the volume indicators are this one. Is the volume is only will tell us if the market will be fast or will be slow. This is not telling us that the price will go up or that the price will go down. And no one knows really if the price will go up or will go down. We just manage our trade. So we are still on negative 0.26 and the price moves away. Still the price moves away from our initial buy. This is our initial buy. So the price is still moving down. We want the price to go up at least this area or in this area. Alright. So by the way, I'm using high leverage account. Since this is a very small account, I want high leverage so that I can place more orders. The more orders you can place, the better. So because this is a scalping strategy, we also have no stop loss. We have no stop loss. We don't put any stop loss at all. We manage our trade. We do the managing of our trade. So that's also the one thing to remember. If you have stop loss, we already wipe out our entire account. So this strategy is discretionary. It's our discretion on when to stop the trade and when to take profit. Okay, so we have no hard stop loss or whatsoever. So as you can see, we are still on negative 0.5 and then we are on 15. So 15, then look at that. Look at how the price spike. So from negative, so the other orders are still on negative. This one, We ignore that. This is a break even. Overall, we are a positive. Then we close all our trade. That's how we manage our trade. Look at that. So look at this big candle. Look at this big candle. Beautiful candle. Look at that. And then look at how the price, how the volume goes above EMA. Okay. So another thing to remember is this. Let's say since the price is away from the EMA in this area, and then we buy, we are at loss. It's very long here, very long. It spikes here, but we still be very long. So one way to solve the problem of putting orders that are still premature, we have this part. This one is telling us. So as I've said, if envelope and the force index are mashing up at the bottom here, this area, then we aim for up. And if it's smashing in this area, we aim for down. So here, as you can see here, this area, this is where we started buying, this area, this level. Okay, we hope that it will go up. So that's how we do our trade. So that's how we maneuver our trade. So the candle is moving up and up, but we are already in profit, so we don't need to wait for more of that because we have placed so many orders and our margins are being eaten up. All right, traders, so here are our summary in the entire week of trading. We started at $13.44 on July 10, which is the start of the trading week, and we end up $17.10 on Friday. So 13 started 1 week trading, end up on 714, and then we have a profit of 3.66. Maybe you would say that is a very small amount. No, it's not the amount, because amount can be scaled up later on. We can put more money in it. As long as we have the proper trading strategy, proper trading psychology, proper trade execution, the amount is nothing. This amount is nothing. Maybe in this case, this 3.66 is $300 within a week, something like that, or 3,000 within a week, or 30,000 in a week. Doesn't matter. The amount doesn't matter. What matter most is the strategy that we apply. Okay. So next week I will also start to do trading again using this very small account, and I hope you guys follow it and can learn something from it. And please subscribe and comment so that I will be notified if there are any concerns you have. That's all for today, guys, and happy weekend. Bye bye.